Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hi, everyone. Welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey, everyone. We have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, I'll be talking with our frequent guest, Joe Fang. Welcome, Joe.
Hey, Gary. Happy New Year. Happy New Year, everybody. Glad to be back.
Well, I guess the first order of business is we finally closed on Icon on Spanish Trail at the end of December. This one was our toughest one to close, to be honest. But, when you truly believe in something, you do everything you can in your power to get it done.
Yeah, Gary, you mentioned that this was a pretty tough raise. Can you kind of expand on that a little bit more? Why was it so tough?
Yeah, obviously, in today's environment, not easy. Investors have a lack of liquidity because there's a lack of deal flow. Deals aren't selling, so their money's tied up. Maybe they have some capital calls. If they're invested in the stock market, they didn't have some wins until maybe towards the very end of the year. But and also investors are very nervous about where the rates were headed. And I think that fear has finally subsided. I mean, obviously you and I were very optimistic going into 2024 and 2025, but other investors were just, they were reading the data wrong and spooked by the media. There's lots of clickbait out there. And a lot of that information was focused on single family, not multifamily. So people are getting wrong information, and it was definitely scaring them.
Yeah, no, I definitely agree with all that. It's I've been investing for over 30 years, and been through many cycles. And it's funny, Warren Buffett always says, buy low, sell high, but like it's really simple, but most people they can't do it. It's like when the sentiment is really poor, generally speaking, that's when the best deals or best, the most opportunistic deals are available. But, it's all good. A lot of our investors, see things the way we do. So, we're glad to get this deal done finally, So yeah, with that, why don't you talk a little bit more about the Spanish Trail?
Yeah. What I really liked about the deal is the basis. So we're getting this 256 units, Class B for under 129 a door, which is fantastic. You'd have to go back many years to find a deal that good at that price. It's our ninth deal in Tucson, which we know very well, and it's within 5 miles of 3 of our other properties. The previous owner also put in about $3 million in CapEx the last few years and really maintained the property well. And there's some good value add to be had as well. There's 40% of the units need to be renovated, and we could charge a premium for that. We'll also add pet rent. And the lower units don't have a privacy wall, but they have a patio. So we'll be able to build a privacy wall for under $1,000 a unit and get a $50 rent bump per month, which is fantastic. And then on the expense side, there's some really good savings to be had as well.
Yeah, I still remember, the first time we set foot on the property. I liked it from the beginning. I mean, it's off of a busy street with close proximity to retail and restaurants, and it's on the street where Spanish Trail is actually the best property on that street. So, it just already had great curb appeal, and then when you look at all the major components, they're already in great shape, and there just isn't a lot of deferred maintenance. So I think that we'll be able to be able to execute on our value add business plan quite efficiently. With that, Gary, can you talk a little bit more about what are some of the major items that we're going to do to the property? I know water savings is a big one, and particularly in Arizona.
Yeah, that water conservation program we'll have a team of people in about a few weeks. They're going to come in and install in every single unit, so they'll be able to get it done in 5 days, which is huge. New toilets, which will have zero point 0.8 gallons per flush, and the current toilets are 3.5 gallons per flush. So right there, you can see that's a massive savings. That'll be about $138,000 a year, and divided by the cap rate, you're talking almost about $3 million of value add within a month of buying the property, which is huge. We'll also add aerators to the faucets and the shower heads, further reducing the water bill. Another project we're going to tackle right away is the front end of that property. You mentioned curb appeal. We're going to actually improve that some more by putting like a faux fence. Like every 10 feet, we'll have this kind of wooden wall, and then skip 10 feet and then another 10 feet. And so it'll give some depth to the property, a nice look to it, even kind of the illusion of a fence without having to pay for a full fence. And we'll add some different color to um, the buildings that are facing the main road as well. So just to add a little bit more pop, which will bring people in. We'll also do some updating on the landscaping to the pool, add some more pool furniture, some dog park toys as well. But and then obviously you've got the interior renovations, which we'll do on an ongoing basis. But it does take time, and you can't overload the property management team. We'll get a few things in place, knock them down off our list, and then tackle a few more. But the big ones are that water conservation and the exterior look, because that goes right to our bottom line right away, and that improves the curb appeal right away as well.
Very, very cool. So we're gonna switch gears a little bit and talk about another project that uh, has been like quite the heavy lifting. So maybe you can talk about it. I think yeah, the Youngtown Flats. Maybe you can give us an update on that.
Yeah, this is a property we bought 28 months ago. It was garden office space in the Phoenix MSA. And I remember the lender who I'd worked with before, and he's like, "Why are you buying this for 1.9 million? That's insane. It's been sitting on the market for a year." And I'm like, "Don't look at it as garden office space. Look at it as multifamily. We're buying it for pennies on the dollar." Um, so we were able to get 44 units at the existing build, and we had some tenants in there that took a little bit to get out, but eventually we got them out. We added 60 new units on the property, and now we're in full lease up mode. We've got about 40% of it leased up right now, and we hope to get it stabilized in the next couple of months, and then we'll be able to refi and get a longer term loan. And yeah, this is definitely a cool project.
Nice. Can't wait to see it again. Maybe at our next property tour. Well, that's pretty exciting.
So one of the things, it was just cool to see have this project come to fruition. We were working with the city, and they were great to work with, and that's not always the case. They kind of move things along, putting the plans together, making it work with the fire department, and then building it out. It was really, really rewarding to revitalize a community from a rundown office building and to much needed affordable housing. And we didn't build Class A because we didn't have to. Our basis was so low, we could actually build affordable housing that was nice and, creating a win-win for the community.
Nice. Well, here we are. This is the fourth day in the year 2024. But before we talk about more in 2024, why don't we just take a moment and reflect on some of the accomplishments that we did achieve in 2023.
Yeah, like I said, we only did one deal, which was disappointing, and we wanted to do more. But what we can feel proud of is that we stayed true to our criteria. We weren't chasing deals. We put in a lot of offers. We were in some best and finals, but obviously we were offering lower than what someone was willing to pay or the seller was willing to accept. And it is what it is. I love the deal that we got. We added 2 new members to our team, which is huge. We're reinvesting into our company to round out our team. They're gonna add a ton of value to our investors, and just being focused on building better systems as we continue to grow and get set up for future acquisitions.
Yeah, that's one of the things I like about Break of Day Capital is that we're not just trying to add more units. We're only doing deals that make sense. Ultimately, we have to deliver returns, strong returns for our investors, and that's always really the key. So as we get into 2024, what are some of your goals, expectations? What are some of your objectives?
Obviously, most important is executing on the deals that we currently own. We're not going to chase deals if we don't have the bandwidth, but obviously, adding more people to our team, we have that bandwidth. But hoping to do 3 to 5 deals this year. Now, most of that I think will be backloaded towards the second half of the year as interest rates fall and there's more deal flow. But yeah, obviously, we want to do more deals. And I mean, we're best in class operators, so executing the heck out of our deals is always number one. I think there won't be a tsunami of deals, but certainly there'll be some opportunity out there. Operators are going to have to sell because of their debt service. Their interest caps are expiring, so there's definitely some really nice opportunity out there, which I'm excited for. And we'll just continue to monitor, macro, monitor all the data that's out there. And I mean, that's a good segue because I mean, you're our macro expert. What are you seeing in the next 12 months?
Yeah, well, Gary, we're gonna be doing a 2024 outlook on January 17th for our audience. So we'll definitely get into a lot more granular in terms of macro at that time. But I'll just kind of give a quick overview. I think that 2024 being an election year, definitely expect some drama, right? Historically speaking, election years tend to be more accommodative. So expect, monetary conditions to ease. I mean, you could see various investment banks, they have estimates, anywhere between 0.75% to 1.75%, interest rate cut, starting as early as March, right? So you can kind of see that happening. And then also, politicians, elected officials, one of the best ways for them to get reelected or to be elected is to promise things to people, and all that stuff costs money, right? So, it is what it is, right? And so you can kind of see that these programs or whatever it is that they want to do for people are going to cost money. So it would not be it wouldn't be surprising to me if they started the quantitative easing, probably in the back half of 2024. So generally speaking, we do expect the markets to be a little bit choppy, maybe in the first half, and then the second half, I think we will resume, price, appreciation, rent growth, etc. Um, we're kind of the economy is starting to reflect the interest rate rises all, in the past year and a half. But then we're also going to be looking forward to rate cuts and easier monetary conditions. And so we're gonna be going through this transition. Okay. So I'll just leave it there. And then we'll have a lot more to say on the 17th. Back over to you, Gary.
Yeah, always insightful, Joe. Appreciate your viewpoints on macro. I know you spend a ton of time researching, listening to a lot of different things. That's what helps make break a day capital so effective, to kind of have a bit of a crystal ball, and not looking at lagging data, which a lot of others do. But yeah, looking forward to 2024. It's always a wild ride. The market, these properties, finding properties, executing on these deals. It's never a dull moment, but I wouldn't have it any other way.
Yeah, sounds good. Yeah, I think the worst is probably behind us, and we definitely look forward to what 2024 brings. And just wish everybody a happy new year, and onward and upward.
Yep, absolutely. Much success. So this is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.